All right, let's jump into things. Where we at? 10:31 on the 13th of December. Friday. No, not so Friday. I was about to say Friday, 13th. That's just a testament to how crazy these weeks are at the moment of that. I was just like, man, sure it's Friday. No, it's only Thursday and that, and it's just every night, or mainly every night, and that because that's the US sessions and that. But it's just absolutely wild out there on the markets, as you can see. Yeah, we'll sort of start off with DXY because obviously we had CPI overnight. Bear flag is the overall sort of direction that we are sort of trying to sort of trade through and get a bit of a breakdown here. And look, in short, if you didn't see it, CPI came in 3%, 2.9 was the expectation. I think the rest of the data is also a little bit hot, so I think it beat on all fronts because it was a bit of a mixed bag of predictions. As we can see here, is expected with the core to sort of tick up one, ticked up two, expected to tick down on the month on month and actually ticked up one. And then, of course, you know, the headline figure, the year on year, and that came in with a three in front of it. And look, it's no shocker. Well, I mean, look, maybe it's a shocker that it came in at a three. I don't really, I'm not sort of finger on the button as to sort of how the actual inflation is running in the US. But the reaction is what isn't a shocker. Sort of seeing it sort of like fly off to the top side, not really so much. But what is interesting is if I clear this up a little bit, we can start to sort of see a few bits and pieces. You know, this horizontal, this is the importance of sort of what not only just sort of like, you know, sort of continuing to sort of chart these things, update them, but have a sort of like, have the sort of solid levels that are still remaining on the charts. It can get, yes, a little bit sort of messy with all these kind of bits and pieces and different, ideas and intraday sessions that was sort of like traded through. But for instance, this little area up over the top here, I was trading and I was talking to two mates actually at the time, and I was sort of showing them that, on a lower time frame. I was even looking at the 5 minute or so. I think it was basically I was getting into. There was this area up over here, and obviously we came up here, flew up into it a couple of times, fell down, boom, boom. And this was around this area here. I said, look, we've actually put in a lower high on a second attempt into this resistance area. I sort of called it out as we were coming into it. And so the big question with this, in my mind, was sort of like, is the market going to run away with this? Is this going to change the landscape? Basically, what I sort of say that it's more like the idea of like, are people going to sort of be reevaluating their outlook? And you're seeing a lot of like everybody's like, oh, inflation, 3%'s ticked up. This is actually the fourth month in a row that it has increased. So, it's not on a great trajectory. If we have a quick look, we might be able to see, which I think this will give us a better look at the chart here. If you zoom this in here, you can see obviously, like, back from stupid highs kind of thing. It's going in oscillating waves kind of thing like this. And I think this is the point that sort of like, yes, it's increased and that's not great. And then look, you came in the low in October, which I'm pretty sure was around the time that they did the 50 base point cut. So obviously that doesn't bode so particularly well. But I think more so to the point that um, it doesn't sort of like mean they're in any rush to cut kind of thing. And that's why you saw the market react the way it did. It's not like it's out of control because if you look at previously here, we had 1 month up, 2 months up, then it was flat and then it came down. Then we had 1 month up, 2 months up, then it held down a little bit, but sort of held. So as you can see, I mean, with the just general thing, you can see it's oscillating coming here and you're putting in lower highs. And that's what it's all about, lower highs, isn't it? So, till you sort of get back to sort of like, 3.7, you put up 4%, bang, okay, then you got this coming potentially back up. And that was the big fear with all this stuff. People look at history and they look at the sort of previous times. I think it was the 70s or so where they had incredible, how far back does this go? I guess 2008. Incredible inflation on the second wave. Let's get back to the charts. And I think that's what people's fear is. That sort of like, oh, it's going to come up, it's going to spike in the second wave. And I think in that instance, the second wave was worse than the first wave. But I don't think you're comparing apples with apples. So, you know what I mean? It's definitely sort of part of the thought process with people in the market at the moment. And hence why you see these kind of things and these kind of reactions when you see the sort of stronger sort of inflation data. But it doesn't mean that it's necessarily one going to repeat what it did in the 70s and we're going back up to now we're going to 15%. I mean, there's a lot of sort of levels for it to hit and levers to pull sort of prior to that kind of thing to sort of hopefully learn something from the past. But anyway, long story short, that's getting away from it all. But point is, reaction isn't a surprise like this. But I did say to them here, is the market just going to use this as an occasion to sell into it? Because if we go back onto a decent time frame here, you can see that this had an incredible sort of sell down through here. And it's had a bunch of different bits of sort of like news coming over here. We had some tariff stuff, bang, sold straight down into it. I think there's possibly even a little bit more sort of tariff stuff or something. I can't remember what it was. This was only going back Monday. But of course, goes up here, bang, and they ultimately sort of sold into it. So as they sort of had the chance to sort of really get it to the top over here, they didn't waste any time. And they smashed into it. And not only just smashed into it, but, we also had Powell talking afterwards. And he, and Powell sort of, sorry, bear with me one second. This is, again, a testament to how wiped I am. Let me see if I can find some of his comments. No, I can't sort of seem to locate them, but yeah. So anyway, we had Powell talking overnight. We've also had sort of more commentary from Trump, like seriously hardest working dude going around now, and the guy's like sort of mid 70s or something. So pump it along. But anyway, there was a couple of bits. Sort of Trump also was going on about sort of potential sort of like tax cuts and that, and what else do we have? Sort of. Here we go, sort of looking elsewhere on this one. We got sort of Fed Chair Powell repeats Tuesday's prepared testimony of the House fiscal thing, blah, blah, blah. Yeah, US House Republicans propose $4.5 trillion tax cut. So, like, there was a couple of sort of bits of sort of headlines and that, but added to this whole sort of move down here. But the point is, but even prior to those coming out, as you can see on a lower time frame, they started to sell into it, and then it just sort of picked up pace as that commentary sort of came out sort of through the session. But if we look at sort of like just again on the chart, where has it sort of come down and found some support? Well, it's pretty much right on where we had that other zone sat down here. So if we pop this onto hourly time frame, you can see buys sitting around this zone here. This is where we had it marked out. This was the idea that we would sort of break out of this sort of channel and then sort of bounce back up here. The bounce did come a little bit higher, so it means that this becomes a very vital level to be taken out now. Going to make it CPI lows just because, I don't call it headline lows or anything like that. But the point is, this is where the buyers are. We expected this because, as you can see, this is why we had this zone already marked out here. This is where they've been previously. We thought it would break down, bounce back up. That's what's happened. Now you want to see that continued pressure moving down to sort of drive it down under here, because the key levels that we're looking for right now in this immediate, obviously, as I said, is coming through this level here, but this is the big one down here, because this is what will sort of confirm a larger move of this bear flag to start to move down here. And it's a pretty chunky price target down at 105.80 should this break. So these are these are very vital levels down here at the moment. So look, it did get smacked down afterwards. The bounce does sort of make me sort of think, okay, it wasn't just a little bounce back up here. It's basically back up into this little range that it was sort of bouncing around all day yesterday. So obviously high up, high down, back in the middle. If you look at this on a daily, it's no doubt probably a doji. Yeah, and as you can see, indecision on this move here. So it is obviously at the moment still up in this kind of structure. So this isn't confirmed. It's just these are the levels to look out for should it start to break down through this area here. Because we saw, look, given the high CPI print, market still said, look, that's great. I'm happy to sell into that. I'm happy to take that. If they continue that push down, we're looking down at the price targets down here. However, as you can see, 4 hour managed to sort of save it up in here. So I don't think the risk for sort of, a little bit of US dollar strength to still remain is abated because, of course, again, look, they did sell into it and we had the headlines to back it up, but it did manage from a structural point to save itself into this little horizontal here. So it's almost got itself a new little ledge here. Um, a new little sort of range through here. So maybe we could sort of even drag this up and sort of say, look, call this our little range that we're in at the moment here. And I would say probably this target, this would be your immediate to fill this wick here or fill this wick down here. I think they're your sort of little areas that you're really kind of looking for if this little zone here breaks. Because again, this is indecision. Data says that we go up here. Market says no, we smack it down. Headlines say no, we go down here. Market says yeah, I'll buy back up. So this is really, as you can see, just consolidating along here, albeit in the moment of a sort of a move down. So it would probably still favor a move down here. We are a little bit overbought, but as you said, it's not completely redlining. It is tipping over to sort of roll over here again. So as I said, these are the vital levels for to be watching. And I think if you get these ones going, you look at whatever it is you're trading, if it's a US dollar cross, and you're probably going to see broad US dollar selling across the board. Now, if we do sort of see a move and it sort of rocks out to the top side here, at least look at like, I'd say minimum an hour, but probably look a 4 hour close above 108. Well, that kind of opens you up to, as I said, come up and retest these levels over here. And it just means that we're just going to see a little bit of a sort of a remaining sort of strength of US dollar, at least in the short, medium term, till we get a little bit more sort of data to say one way or another. But as you can see at the moment, the bear flag is potentially trying, but it's not quite there yet. So that's why we have these little key indicators to see if it's going to come down through these areas. Wick will be the first one, then those lows from last Wednesday will be the confirmation, the big move down there. All right, so move along. We've got Aussie. Aussie, what what a headache this one has been. I sold the pop here yesterday for I mean the normal sort of like 10 positions or no, maybe it was sort of 8 positions or something like this. About 10 points a pop and that, and it was all good. Bam, 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 bam. I put a post on X and I said sort of like why do I sell the pops? These are the reasons I sell the pops because look at these smackdowns here. It is having such a tough time to get up above this 63 zone. It got up here, it got hammered, and the CPI bang rocketed it down. But this is the thing, I bought a bunch of Aussie down at these levels here yesterday, and I got out some here, I got some here, I got some here. The last ones I sort of got out, I think maybe about 63, thereabouts, I think. Let's just have a quick look. No, 96. So as you can see, oh wait, put these on here. For what it's worth, they're the trades there. So as you can see, 62.38 just down just on this zone down the bottom over here was the best entry. Oh, actually that was a loss, that one. No, 36 to 43, 45, 49, 50, 64, 80 to 96, and so on and so on. So, yeah, obviously, yeah, it took a little loss on the sort of first one there. That's not the end of the world. But the point is, this was the area in which I was laying, like as I said, I was talking to a couple of mates. I said, look, yeah, I bought a bunch of Aussie here because I still believe that we are going back up over here. So although it is having a very hard time getting up and above this zone over here, I saw this more as just a little bit of a cheaper purchasing level. And obviously, as you can see, it worked out fairly well, sort of moving back up. And yeah, hence the late night, riding this sort of back up through the top side over here. So look, it came back to life quite strong. Look, realistically, a bit out the top, a bit out the bottom, bit out the top, back into the middle of this range. I'll put it on a decent time frame, 4 hour. So look, again, the main sort of levels that you're looking for is obviously this little zone here now, because we could start to see that this is where the sellers are capping it. it's getting a little bit higher, and obviously you push it down. And not, I mean, look, you got sold down here, bought straight up, smashed down here, bought straight back up. But people are still waiting for some sort of confirmation, i.e., sort of further selling off of US dollar across the board to see whether we're going to get this breakout. But I do feel this is kind of imminent. This could be the famous last words, but we will see how we go with it all. RSI, look, not great. Sitting around that sort of, look, it's not the end of the world, but you definitely want to see some sort of continuation through here. If we see an early sort of push up, I mean, obviously we haven't had sort of volume come into the market yet for the day, but if we see an early sort of push up through here, I think that's going to be the time you go, because the RSI will then sort of turn around, cross over, and it's got all this room to run back up to support to get to potentially higher high with RSI moving up to a high high as well. If this dribbles down from here, well, you're moving down, then you're looking at these levels. You're looking at 55 again. You're looking at the sort of 30s to 40s, and they're the sort of downside moves that you're looking. But as I said, I think sort of with potential for that DXY to break that bear flag, it's going to be US dollar broad-based selling. And if we do see that, then Aussie's going to be the sort of recipient of part of that. And we're probably going to see that sort of help sort of move things to the top side. But certainly above 63.10, technically didn't close that gap, like within a whisker of, and then bang, sold down. So close enough, good enough kind of thing for it all. But remember, that's that gap from, when was it, Monday morning? Yeah, Monday 2 weeks ago or something like this. Anyway, we'll see how we go on that. But yeah, certainly I think your levels that you're really looking for of 63.10, as we've seen a number of times. But should it sort of dribble back down over here, we can see that the market has tried to hold it through this level a number of times, trying to do it again. You break underneath 70, and you're looking 55 and then 40 for lower areas to see if we're going to see any sort of bounce. Maybe not this 40, so 55 so much. It seems to have just cut through this a fair bit the most times recently. Has been in the past, but the more that it chops through a level, the more irrelevant it comes. Yes, it chopped through these ones, but as you can see, it was very, very, like, the way that these ranges work, you'll have a middle ground on it generally. As you can see, it tried to hold it, rejected from it, above it, rejected from it, hold above it, oscillates around it. So your ranges generally sort of have a nice sort of middle line through the middle there as well. Look, as I said, 63.10 top side, that's where you're looking for it to move out there. Just on that, I'll see if we've got any sort of data. I don't think we've got anything sort of special. Friday's generally a pretty quiet day in terms of Aussie data. We have some inflation expectation out in 10 minutes. Sorry, is that correct? Yeah, cool, out in 10 minutes. So no forecast for this one here. So again, if this comes in hot, it's I have a feeling this might have a little bit of a push with the market, only just for the fact that we've got the RBA next week. Everybody's and their dog is priced in a cut. And hold on one sec. Cool, and I'm back. Um, excuse me. I don't know, 3 minutes of that inflation expectation just comes out. I always notice this as well about the pound. They always do these things at like 11:01. Very odd. There must be a reason for this. Anyway, yeah. So as I was saying, every man and his dog is sort of priced, expecting a cut. Generally, when you have these things where everybody's fully priced in, and look, Aussie has been absolutely smashed, as we know, for the last couple of months. Not all just from, this sort of potential sort of rate cut coming. That is part of it, mainly because of obviously US dollar strength. So there's a couple of factors, of course. It's never just a one size fits all for these kind of things. However, point being is that the risk is to the other side if everybody's priced for the cut. Remember, when if we go back and have a look at sort of what happened with DXY, when we were way, 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 way back down here, this is a good example. Rate cuts are coming, rate cuts coming, rate cuts are coming. Fed's going to cut. How much is going to cut by? Wow, 50 basis point cut. This is the move. Yeah, look there. Can't even see it on this chart. You got to zoom in so much. That was the reaction from the 50 base point cut. That's the pricing in of it. So it goes to show that sort of like, a lot of people have already sort of like, obviously been taking positions, getting ready for this sort of thing. Doesn't mean it's not going to come. It just sort of means that there's also a high chance that you get a buy the rumor, sell the news, or they hold. And remember, last year Bullock said what she was looking for, or the RBA was looking for, was a two quarter on quarter prints of the CPI in the target. They've only had one. So, even by your own admission of what they were looking for, they haven't hit that. So, look, it's not to sort of say it's a definite move out here, but I would say the idea that sort of like, rate cuts are coming and we're going to go sub 60. I mean, look, everything's a possibility, but you know what I mean? You do have to consider both sides of the coin in that. And as I said, you could get a sort of rate cut and we could see things move up. We saw that with ECB more recently. We've seen it with, I don't think BOE actually did follow this trend. RBNZ did and BOC. So, three out of the four there, and obviously Fed as well, 4 out of 5, show that sort of like, when these things are heavily telegraphed, the risk is that it just gets pushed up and people profit because, the profit doesn't belong to the people I say this time and time again, profit doesn't belong to the people that, sat down at the computer that day and go, oh, it's rate cutting, so I'm going to short it. Like, the people that are making the profit and due for the profit are the people that have been positioning themselves for this stuff to happen around here. All right, so we've got data out in a moment. Just having a quick look. Obviously, Aussie pushing up very, very marginally off this zone here. Coming into this, we're also seeing gold and silver push up a little bit here. All right, I'm just going to just keep an eye on a few positions. All right, so we just had this come out here, and that's quite strong. 4.6%. Like that's inflation. Like it's a low sort of whatever one, the rated one with this here. So it's not the main sort of bit of data that things are running off, but of course it's a piece of the puzzle that you got to sort of put in there. And that's showing a big jump up in expectation, inflation expectation there. So just bear with us 2 more secs. All right. Anyway, on with the charts and see what we can see here. So look, as I said, that's a fairly big tick up. But as you can see, it's not a massive high tier bit of data. So you're not seeing rockets on these things. It's just another piece of the puzzle that we kind of sort of put into place. All right. So yes, Aussie, bang, we've covered the levels there. Let's move along. Let's have a look at gold because the reaction on this was just a rocket. It was so close. I was speaking to a mate and he trades futures. And he had a zone just around here, and I said, "Yep, well, if we get down in here, I want to give it a go." Body fill, that would have been perfect. So we got very close, and the reaction on this, bang, it just flew back up. Silver actually of the two was a faster um, mover. I kind of stuffed the silver trade in that. I had three positions, and I think I ended up $14 or something like this. Which when you see the fact that it jumped a buck. Yeah, that was so three parts of the trade. You got analysis, execution, and management. Analysis was okay. Execution a little bit poor. Wasn't the best levels. Management poor because basically the execution was poor. So I just wanted to cover myself and sort of protect myself from a downside if it just happened to bounce and then roll over and sort of shoot back down again. I didn't expect such a strong bounce with silver, but I caught gold a couple of times on the way up through this move here. So look, really strong sort of bounce back up into it, 61% and a little bit more down towards the 78%. But I just thought this would have been a great sort of little level over here. So look, we are sort of seeing it obviously sort of bounce up here. It's opened up early. It's pushing up to the top side. Look above this zone here where we've had it marked down. We said, look, this is where some sellers are. This is where they came in, push it down, push it back up here again. You go above 29.10. So breaking. Again, got to call CPI highs just through that thing. Above 65.10, and I think we're off for another little sort of trek up towards, potentially up towards sort of 23 there. And we can sort of see what happens there. We do have a little bit of a zone through this at 15. Obviously, this is here. It'll be a sort of lower time frame, sort of range that it was sort of building through here. 4 hour obviously sort of seemed to line up well with the 23. So above 10, above these wicks, we can see market sold it down. Sold it down. First time back up at there, what did it do? Sold it down. It's the same stuff. And this is what trading is really about. It's just, you know what I mean? You don't need to reinvent the wheel every time. You just need to sort of know what is the market going to do when it hits these levels. And if you want to be a buy at the bottom on right to the top, go for it. I'm here to make money in and out on a daily basis. And so when it hits these sort of zones, I'll jump out. So, it's certainly said ticking along here. A little bit overbought on the 1 hour, but I think the 4 hour actually looked pretty good, as I said. So I think if you can really sort of take out this level here, this is a bit of an odd sort of, look, it's the end of the session, but it's an odd little setup here. In the sense that obviously sold down, push back up. This would almost be, if you disregard this candle here and just look at these two, a bit of a sort of hanging man kind of thing. But the fact that it's still plowing through here, and if we take out those highs, I think you're looking for at least a sort of 10, at least a sort of probably maybe a sort of $10 move, potentially even sort of moving higher. So obviously this would be a zone just up over the top over here. So those shorts are just, I told you, they came hard and fast the other day. We've had a couple of sort of efforts down. I know a lot of people are sort of like ready to sort of write, I don't know, particularly when you see this pullback here, ready to write gold off and say, oh, are we about to see the full shift? Everybody wants to be the top dog and call the bottom and call the top. Look, I think the way that gold will generally fail, in my experience, in my opinion, is you'll get either a blow off top. I mean, this did have a nice, if you have a look on a higher time frame, it's probably got a nice little wick involved with it all. Let's take the stuff off here. So a nice little blow off top wick here. Yes, boom, pushing back down here. But as you can see, on a daily basis, we're coming up into wick territory. So if you trade dailies, I mean, look at these ones. We had the sell downs here. Once it took out these ones, poof, it ran. So yeah, above 2000 and 2910, forget what bloody 100 we're in, above 2910, you're really just coming up in terms of a daily into wick territory. It does look a little bit, insane, to say the least. I mean, look at this move through here. Look, it has been insane, and look, this thing will roll over eventually, yes, but if we have a look at this on a weekly, it's insane as well, of course. It's not going to change, but again, the candles will generally sort of start to get a little bit smaller, and you'll start to see a rollover. Anyway, what I will sort of say, if in my experience, it'll have a nice sort of defined level where it can sort of break under. And if you have a look through here, I think sort of this 80s could be a good little level now that we've got a high. If this fails to put in a new high, so if we see this come up, as I said, those 29, 23s, these kind of things, and we see a nice solid effort back down and a close under 84, you've got a little couple of zones here as well. Let's put those back on. It's a little bit messy through here. So a couple of, I've lost where we're at now anyway. Anyway, point being is it'll have a solid line, I would say. Like a flat horizontal, which will test, and then break down through. I think that'll be it. Because remember, we're still in this most immediate rising support. This is going to get a reaction as it does actually come down to it again. I don't think this is going to be a complete meltdown. Even if it does, and it comes back down to 2790s kind of thing, 2780s, these kind of areas, the previous highs over here where we can see this has provided us with our breakout point and backtest point. Even if it does pull down to here, it's a 4% drop. Well, actually, how do I know? It's a bit bigger now, isn't it? Because we're up to the top over here. 5% drop, which, in gold standards is a fair bit, yes. But it's not massive. I mean, you look at some of these other things like your cryptos and all these kind of things, and they're dropping 20%. So, it's in the sense of it being a sort of store of wealth and all this kind of stuff. Yeah, I mean, a solid pullback here at some point is highly likely, but a 5% pullback is not the end of the world, even if it is a $152 move to the downside. That's the price you pay for being so high, is that, the actual percentage moves become larger. This is like a good example of sort of trading GJ against like Aussie. GJ could drop 1% and it's dropping 180 points or something. And sort of Aussie will drop 1%, it'll drop 60 points. So, it's just the cross that you bear from being a more valuable sort of asset. But anyway, that's again the biggest sort of picture for there. So 2910 is the top side that you're looking for. If we see a fail under this, as I said, this little sort of kind of hanging manish kind of thing down here, I think sort of below 2893. And you've got to start to think that this will become potentially a little bit of a range. You're looking down, and as I said, a close 4 hour underneath 83. I think you could say that, it's kind of sort of sliding down here a little bit. What we'd do at this stage as well is we'd sort of just link the highs. We'd say that this would be this here, and this would sort of call across here, which, as it is right now, seems to line up pretty well. So I think this will be crucial because, again, it's not like this is a perfect channel, but it'll show that this is not something that the market's, I mean, even if we can eliminate what the market's not looking at, we can sort of then find what the market is looking at, and then we can trade off that. And I think the horizontals will probably hold a little bit better and a little bit more weight. But should this sort of reject off down here, well, we've got a couple of touches over here. We've got a couple of touches over here. Still doesn't confirm because you kind of want at least sort of 3 touches on these things. But it means that we can work it out potentially where buyers and sellers might be sort of stepping in should this roll over and come back down over here. But as I said, I think sort of drag this one across a little bit more, just out of the way. I think sort of certainly a flip back under 29 here, but underneath 93, and I think some sort of intersession trade shorts would be the play. But at the moment, RSI is ready to sort of support this should it push up, and we should be getting volume in about half an hour to an hour or so. All right, silver. Keep flipping onto the wrong chart with this one. Came right down here. So it's funny. I was looking at the chart like this last night, sort of after the fact, and I was like, why is this bounced here? Because I use TradingView to sort of chart these things, but I obviously execute on a different platform. But I'm like, what is this chart through? Why have I got this level through here? And then I sort of put it onto a lower time frame. And it's because it's the body fill of that sell down that we had when we broke, backtested, and came down here. So look, it is respecting the chart very well. Back up into its range, and it's kind of in the middle of everything here at the moment because it's in the middle of back up into this little consolidation. It's fighting sellers where it had previously, so there's obviously a little line of sellers where we have this marked through here anyway. But that body fill was just like the springboard that got this back up over here. That's why I sort of like, having 3 positions and one loss, one profit, which wiped out the loss, and then one that got me $14 or something like this. Through a move like this is just like, come on, mate. But you can't win them all. Anyway, long story short, we're in the consolidation. We're still testing the underside of this channel here. It needs to really show commitment and push up the top side over here to negate this previous support, now resistance coming through here. So I think levels in that in the immediate, obviously it's just come back here and tested this little one. So you want to stay above here, but you want to go above here. I think they're your 2 levels. So below 32.15, 16, above 32.37, 20-point little range for this here to sort of see if we're going to get a continuation. Top side, you're looking at 32.50, and that's going to see some reaction here. It's been a while since we've touched up into this. We know sellers are sitting just over here. as they have been sitting here and here and here. So that's definitely going to be your little short-term target for the top side. Should it break down and sort of fail through this area here, as I said, you probably see gold doing the same at the same time. You probably see, as I said, that potential persistent strength in US dollar. That could also sort of be sort of a reason for this to sort of come back down over here. Probably look for this little top side over here to sort of see what happens sort of around that 32 with 31.90s. I think that's potentially your move to the downside here. You'll probably see a reaction. It's not like a major level like these ones up here. It's more of a sort of obviously intra kind of level. But I think that's probably where you may see, because we've got some resistance, broke through, used as support a couple of times around to that sort of 32 level. So they're pretty clear-cut little levels that we're sort of looking at. I could probably get rid of this one now because it doesn't seem to have held much weight. I think this is more what you're kind of looking at as to sort of where the sellers are. So a little bit of a sort of tight range, but you're looking either side of this, not massive, yeah, but pretty much similar trades, I'd say. Yeah, pizzle, 0.5% or so, either side of it all. But I imagine sellers to come in here. I imagine buyers to come in here. By this, there is a higher chance that the sellers are going to cap it. This is a maybe. If not, bottom side of the range, that's your next level. So down here, and then down here. Depending, obviously, the speed that it comes down as well. If this dribbles down over here, you could get some sort of confluence of this previous sort of falling resistance, you becoming a bit of a support. So it could be a back test, springboard back up. But I wouldn't be looking to sort of necessarily short this thing more than very short term, unless maybe you want to short here and then sort of take a little bit of a win through here. But again, look, it is obviously stalling, but it's very much stalling in the top end. So if we look at this move from the lows, probably I'll take it from this low here, because this one actually put in lower lows. So from this little breakout push here, 38% is about the best it could muster. And that was what, Monday's trade, Wednesday. That was Wednesday's when it broke and came down here. So look, in terms of this as a sort of move through here, it's still very much bullish. A 38% is very much a continuation pullback. And this is what we sort of say time and time again. This is how you sort of see silver play it out. We got maybe jumped the gun prematurely there. But if you put this one and this together, this looks like a very much a silver. Let's clean this up. Let's get these out of here and here. This defined line, taking out the lows, taking out the lows, taking out the lows, is very much a silver play. We've seen it a number of times. Defined line, lower, 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 bang, breaks through. Defined line, lower, 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 breaks through. So this is very much something where we could see this, should we see US dollar sell down and break down, we could see this lead to a bit of a breakout above the top over here. But certainly you'll get some sort of reaction at 32.50, but that's your major breakout line should you decide to go up above that. Above there, look, from what I've got marked out, look, there's going to be a couple of levels, 32.90, probably 33.10 would probably be a little bit more of a target. I mean, whoop, small zone through here. That would be your sort of immediate sort of target, should you get a big breakout here. But as we've seen a couple of times before, defined line is always very good for silver. So I'll push up to here, retest down here to 32.30s, and then a drive through if that were to play out or come to fruition. All right, so there's silver. We got copper. Yesterday, copper, I was saying, look, we're probably sort of targeting back up here. We did have a little bit of a dribble down first, but, as you can see, very much still in control of things. Maybe it was on the daily. Yeah, so this is exactly what I said yesterday. If you watch the video, you see we sold down here. I think we were down here. Well, it must have been here because it was yesterday in the morning. And I said sort of like, these kind of things, when they sell down like this is your body fill, is your target. even if it were to sort of come up, and if even it's going down further, body fill, and then you have boom, a wick down here, sort of snap those people out and push back down there. But as you can see, buyers still very keen on this thing, like right up at the top of this trend. There's zero, I mean, like pretty much zero pullback, and it's really pushing into this zone here. Should this pop through here, you're probably looking for a run up to 44.88 next. So that's a fairly chunky size little zone it's got coming up here. It's another 3%. Should this continue to sort of push through. RSI's rolling a little bit, but we'll see how this session goes. If this pushes back down over here and we see a consolidation through this top side here, consolidation underneath here, then there's a chance that this thing could then obviously continue the RSI and we could see a fail and I'll sort of push back here. I think today will be crucial because you've come down, you've got your second effort. I mean, it's pretty much finding sellers right on point. It's closing up near the top. If this has got enough to push off, great. If it comes back down here, again, I'm not going to be shorting it, but I'm certainly going to be, putting it on the wait and see kind of thing, and maybe try and get in at some lower levels. If we have a look at this last move through here, again, look, 23%. That's a very bullish continuation level for things to come back to. Even if this sort of really, if this fails through this area here, you're looking back down at 447. 50% retracement, retest the top side here because it kind of really just broke and ran, and then sort of see if you can sort of get a bit of a bounce from this area back down here. But at the moment, it's just going to wait to sort of see what they do. As I said, look, things initially here, they're sold up early, but we haven't got the true volume in yet. So I think I'm reluctant to sort of jump on it too much, but it's kind of looking like we might have a little bit of US dollar strength through this session. We'll find out in about sort of 30, 40 minutes. All right, and China got the breakout for a moment of this little zone we've been in and slammed. So with these little ranges as well, there's I think sort of, as I said, you'll have a midway point that'll cut through these things here like this, as you can see, resistance, 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 bang, unable to hold it, resistance, now it's support, support, resistance, bang, push down here. There's another part of it all where you get sort of like an oscillating swing out of these things. So you get a move like this, and then you'll see maybe a move like this. Didn't actually come quite, maybe let's just do the bodies. Boom. And then boom, like this. So anyway, it's not an exact science with it all, but the point is, it's in its range. Tried to break out to the top side, slapped on the nose. Tried to break out to the bottom side, pulled back in. This is still the range that it's in. It's in a higher time frame support area or swing point. It's getting very close to this rising support and just really sort of consolidating through here. So I thought we might get the breakdown to come down like this. This will still line up. This will still be a plausible play should it break down. Came down, as you can see, right to those alerts, but didn't quite trigger. Maybe it did, I don't know. Anyway, came down here. I think sort of should we break down here, it lines up very well to bounce off this little support area, potentially retest, and then we can see this as a potential move. Should it break down to the bottom side here. But like everything, like the DXY and all this kind of stuff, it's just indecision. Market doesn't know what to do with it. It wants to sell US dollar. We know that Trump wants a weaker dollar, and the way things are going, what he wants, he's going to get. But you've got to factor in the actual, the data that's being presented to you, reality sense that inflation is in an upward tick. And so while people may want to sell the US dollar, they're still cautious about it. So next couple of bits of data will be telling. If they're weak, we'll see continual resumption of selling on US dollar, in my opinion. All right. Yes, I think that's about it. As I said, I've already kind of really gone over the news. There was that inflation expectations ticked up there. Through the rest of it, we got inflation expectation for New Zealand seems to come in with a red. Interesting. Not really much through the rest of the session. We've got GDP from UK. Nothing too exciting here. Nothing too exciting. PPI tonight, this will probably be the one that we're looking for. Should this come in a little bit stronger, maybe this is why US dollar is also sort of sitting up there and failing to sort of completely commit to the downside. With PPI, obviously that's further up the stream, and that's looking to tick up as well. So if we see this tick up here as well, that's two. Look, PPI is not as big as CPI, but it definitely holds some weight. And if this comes in hot, then that's kind of like, well, inflation's going up for the consumer, inflation's going up for the producer. You need this to come down technically before you're going to see, well, in theory, before you see the CPI come down, because obviously, it's costing them more to make stuff. They're going to be selling it for more. That's the inflation. Unemployment claims looking fairly flat. And then a couple of weird 2:30 a.m. bits of Aussie data. And of course, retail sales tomorrow looking to tick down. Look, that's actually quite weak on this. A little bit of a drop off here on the month-on-month core, which obviously they strip out something. I'm not quite sure what they strip out in terms of retail. That's also looking to tick down. So these coming in weaker will be a tick for the US dollar weakness. A bit hotter, that shows that, hey, look, inflation might be ticking up, but they've still got money to spend. We can sort of keep the rates high for a little bit longer. All right, that's it from me.